This is Tom Nunemaker with Capital Discussions. This is my trading update, the Kevlar trades for Wednesday, September 24th, 2014. So the market rallied, the U.S. equity markets, and the dollar had some buying. There was a German report that came in weaker than expected, so the euro dropped about 70 or 80 points, something like that. So we're kind of struggling with our euro trade. It's still okay, but we definitely have to watch it. SPX was up 1563 today, closed right near 2000. So let's take a look at the charts just so you can see what's going on. Let's start with volatility. So the markets opened lower and then had a strong rally into the close. That's the red line. That's the ES futures. And the volatility, as you would expect, pretty much dropped quite a bit. So the VIX was closed at 1493 yesterday and 1327 today, so down quite a bit. And you can see the October, November, December futures for the volatility. They're all parallel, no risk of crossing. It's the normal contango we're used to seeing. And let's pull up the SPX. Here we are. So we're right in the middle of this congestion range. So I think it's going to bounce around here for a little while longer. Let's take a look at the euro. This is the euro futures. So right now it is about 6 hours after the US market closed. And the futures, as you can see today, they gapped lower from that report. And they're just kind of drifting around here. If I go to a little bit more narrow, actually I added another chart. It's kind of interesting. So this is a combination of the ES futures, then the colored, and the blue is the euro, because I'm monitoring both of them, so it's nice to see them on one chart. So you can see the euro after that sell-off has just kind of gone nowhere. So it's just, the news is out, nothing really to move the market for the rest of the day. And the U.S. equity markets had that nice strong move. And a little bit weak at the end. Right now it's overnight trading. Again, here's the ES aftermarket action. It's right here. Okay, so I set the time for 3 p.m. Central, 4 p.m. Eastern. If I set it for the next half an hour, remember I'm using delayed quotes, then it gets a little squirrely. So I'm just going to go back to right on the hour, 4 p.m. Eastern, 3 p.m. Central. So if we start, well, we have SPX loaded up, so let's take a look at it. In total, this says we're down $600, but for my broker statement, I don't believe it. Here's the this butterfly, and I'm not sure how accurate this is. We had some volatility going down, and if we're overall, we're negative Vega, so maybe let me try half an hour before the close. Maybe that'll give us some more realistic numbers. Okay, there we go. So that's up 677. That one I believe. So if we look at the December trade, that's maybe a little too high. So it's somewhere in between here. These numbers are not good. The risk graphs are okay though. The one that expires on October 11th, we are looking like this. So I have to get rid of this window, that toolbar. All right, so our short delta's at 13, so that one's in pretty good shape. If you look at the risk graph for that, it's pretty close to the, well, 966 is the expiration profit. Let's see where we're at now. Below that, but even over the next 9 days, we still have a nice chance for some good theta to kick in. Right now, theta is around 86 per day with 9 days to go. So, right now, if we're at 638, we could easily be at, another $1,200 in 9 days. So, this is a really good place to be for this trade. The December trade, again, there's so much time on this, it's kind of hard to really, and now it says it's up 1,300. Okay, I don't really believe that either. So this is probably more like it right about here. So maybe 171, something like that. That's more realistic. And the one that expires on October 17th is here. This one, I actually did have a trade today. Let me take a look at that. That was Wednesday. So 680 and 1750 are the prices that I got filled at. So 1750, so it's already come down almost $2 and a dollar. So I've made $100 on that trade. So basically it just lifted the I'm looking at this one. It lifted this expiration P&L up about $1,000. That's what it did. So it gave us pretty close to zero here. It didn't really change this line, the T plus zero, too much. Kept it pretty flat, but I wanted to just lift this up a little bit. So I added just a little bit of margin to the trade, not too much. And it's a PM account. There's still over half the account left in margin available. So if I take this out, actually if I leave it in, I can see this is what we had before. Okay, so I was minus 22 delta, and then I got it back closer to delta neutral and lifted that call side up. So that's basically why I did that. And if you look at the combined position, we're minus 33 delta, pretty good theta, nice vega. And it looks like this right now. And if we stay in that consolidation range, over the next, say, 10 days, we'll hit this line. So it could be anywhere from, 1,500 to 5,000, depends on where it falls. So we'll keep our fingers crossed that it's going the right way, maybe a little bit down to neutral. As long as it doesn't rocket up, we'll be fine. And in fact, if you look at the only reason that that's pointing down is because this December trade's pulling it down if the market rallies. But again, there's so much time on that, I'm not really worried about it. Okay, so anyway, that's where we are. I will update you tomorrow. And don't forget, Jim Riggio and I will be on at 4:30 Eastern to talk about how to hedge a $1 million portfolio. That should be pretty interesting. So I look forward to seeing you then, and I'll update you with my trades tomorrow. Thanks. Bye.